This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? It's Thursday. Welcome back to another episode of Benzinga Live. I'm your host, producer AB. I've got my man Steve Kalyjian hanging out with me in the background and his 30 monitors. As always, we're going to be bringing Steve on in a few minutes here. But guys, it's Thursday. Markets are up still. For the most part, you got your QQQs up more than 1% right now. S&P 500 up about 0.6%, and then your Dow Industrial Average up about 0.8%. Man, Tesla, of course, biggest headline after the market or after market close yesterday, reported earnings. Earnings weren't great, weren't terrible. Stock was trading down about 8% this morning, up 4% since then. So now trading down only 4%. Tesla around $213 a share. I had puts overnight. I knew right away last night when the stock was only trading down like 4 or 5%. That wasn't going to be enough to make any money off those puts because the implied volatility was much higher than that. We talked about that with David Green, and DG and I were both in agreement that we thought the move was going to be bigger than that. But I guess I think my thought process is, had Tesla been trading, and it's kind of screwing me up in here. I'll pull up my chart. It kind of screwing me up because I still think about Tesla in terms of its old share price before the 3-to-1 split. So I was like, if Tesla was trading around like $700 where it was, which would be around like $235 or so, that'd be one thing kind of heading into the earnings. Let's find a Tesla chart here. Basically, that I don't think the earnings report was great. I think the stock would have gotten crushed, but the fact that it had already gotten crushed, so much leading up into that week. If you look at the chart here from October 6th, I mean, if the stock had been up here, right, at around like 280, which would, let's see, put us at around like 840, around 840 a share before the split, then that report would have absolutely crushed the stock. But just because the stock had been trading down so much into there, I don't think you had as much alpha to the downside. I lost money on those puts for sure. I did make some back on some calls on the Qs that I had going into the day. So at least happy to see that. But again, let me know in the chat what you guys are watching. Oh, almost missed out on the... Yeah, the odds are against. Yeah, and 100%, Jay Rice. And I don't typically play earnings like that was the first earnings play I've done in a while, and it was because I had a thesis that, kind of like when Netflix had their first bad earnings report a few months ago and the stock really went down, that, my thesis was that the earnings report, and I guess it's still right, had a potential to be that catalyst that showed that, okay, growth has really started slowing and all this stuff. And that didn't really I mean, like I said, I think the numbers were mixed. I think it was an okay report, but the stock had already been trading down so much. But 100%, Jay, you are correct that most of the time earnings stay within the expected move. So if you're buying calls, buying puts, and Jay, I believe you said this yesterday in the chat that you might be better off selling calls as opposed to buying puts, and you would have been correct. You could have sold calls and puts on Tesla overnight and made money. I mean, there's a lot of risk there, but it would have worked out in this case. Hindsight is 2020 though. Biggest news of the day outside of Wall Street, outside of financial news, is Liz Truss in the UK, resigning as the prime minister. I think it's fun. I didn't know really what... Pull the stream up for a second. I don't know if you guys saw this. It was pretty funny. These people had a lettuce head. I don't even think the lettuce head started to wilt. I think it's completely fine. I think you could still eat it right now. But someone made a stream saying, will this head of lettuce outlast Liz Truss, who was the new prime minister of the UK, who I believe, I don't know how long she was actually in power for, 2 weeks, 3 weeks. Regardless, I don't know the exact, situation here. I'll drop this. We're live on our channel. talking about our girl Liz right now. I'm not too up to date on UK politics, to be honest. I know the Queen died. I know Liz Truss is. Oh, Jay, you did. I'm a seller with call or put. Oh, did you do that though? 6 weeks, less than 45 days. All right, so longer than I thought. I was giving her 3 weeks. It was actually 6 weeks. Hunt's appointment was the nail in the coffin. I care most about like the political, or not the political, the market implications of this, and I don't know if there really are any. Obviously, in the UK there will be. I don't know if there are any here in the US. But what a crazy! I mean, I can't imagine a president of the United States resigning after 60 days. It'd be an absolute shit show, or after, or in less than 45 days. Oh, they're asking for a link. Can you post a link to the playlist? I don't know if I'm allowed. Can I post my link in here? Can someone else go in that chat and post a link so I don't get in trouble? The people want to come. The people want to come talk to, or come hear us talk about. Already covered them, Jay? Hell yeah. GBP rose up, but it was the pound sterling, but it's temporary. A lot of people have been late. I mean, we know what happened when she announced the tax cuts. Of course, the pound absolutely tanked over the weekend going into that. I knew she was going to cut taxes for the richest people. I guess it's some sort of stimulus. I don't. Okay, again, we can talk about this. How does this make sense for some sort of economic stimulus to cut the taxes for the ultra wealthy when you already have members of the ultra wealthy that come out and say like, yeah, I make a $2 million a year, but I can only buy so many blue jeans. I can only take so many Ubers. I can only spend so much money, shopping on clothes. It's like only so much money from the ultra wealthy goes into the economy. Their spending habits aren't going to change when you give them tax cuts because they already had enough money to buy whatever they wanted in the first place. Now they can just invest more or do some other, maybe go buy some art. Maybe you're inflating art prices with your, tax cuts, but not, I don't think economic stimulus. Live on our channel. Let's see if people come in. Let's see if we get some UK, let's see if we get some blokes coming in here. We will even call soccer football for you. What else can I say to entice these Brits to come over? We have fish and chips. Throw the link in there again. The lettuce won. The lettuce did win. Who is Shelly? You might know more than I do. Who is going to be the new prime minister? I mean, I assume there's an interim one, right? New prime minister of the. I mean, correct me if I'm wrong. Do we have any people from the UK in the chat? The political situation in the UK has just been a shit show since Brexit, right? I mean, they voted to leave the EU. All right, let's do who do we want? Who do we want to Vox? Is Vox okay in this situation? Like who should I go to? The UK, not to mention. Okay. Yeah, see, Vox is getting pretty polarized with it right there in the first sentence already. How about Reuters? Reuters will be good. Reuters, Liz Truss. I just want to know who the new one's going to be. What you need to know. This is what I need. Liz Truss said on Thursday she would resign as Britain's prime minister just 6 weeks after she was appointed, brought down by her economic program that sent shockwaves through the markets and divided her Conservative Party. I like how I like the words that have random different English spellings, like color as COLOUR. Program, I don't know. Maybe that's a completely different word. She said she will remain as prime minister until a successor has been chosen within a week. Okay. So there's no interim. She is the interim. So she goes from being the prime minister to the interim prime minister. Got it. I can't, in NFL coach terms, I can't imagine about 10 people joined the room and left since that link got posted. Yeah, well, maybe they came and saw that I wasn't the best person to be talking about Liz Truss politics. But in terms of NFL coaches, I can't imagine an NFL coach stepping down, but then continuing to coach the team that week. Like, once you step down, you're done. You're gone. What's she gonna do as prime minister over the next week, where everyone knows she's done and kind of embarrassed herself? Sterling rallied after Truss resigned. The FTSE turned negative. Britain's mid-caps jumped as much as 1%. Oh my God, jumped as much as 1%. Holy cow. Investors reined in bets of a full percentage point interest rate increase by the Bank of England next month after a top official said it remained to be seen whether rates rise as sharply as the market has been expecting. The biggest jump in food prices since 1980 pushed British inflation to 10% last month, matching a 40-year high hit in July with a new blow of households grappling. So yeah, I mean, the situation in England has been great. What we haven't been talking about as much, keep in mind, is the energy situation. And I called this a few weeks ago, right, when everyone was saying, "Oh my God, you know, this is the biggest bear case in the world. The energy situation in Europe is terrible. They're not going to make it through the winter. Pubs and businesses are going to have to close in UK because they don't have enough supply." All of this shit. And I was saying that's not what the markets are saying, because when you looked at the futures markets for energy prices, they were all normalizing. They were all coming down. They all showed the energy prices in Europe was coming down, and that's what's been happening. Obviously, prices overall haven't been coming down. Inflation's still high, and so is energy. It's just not at the parabolic rise it was on. We love Boris Johnson's here. I still don't get why Boris Johnson resigned. It was something with like he went to parties during COVID. So what? Weren't there a lot of politicians around the world who got in trouble for that? Like, that seems like a very not big deal reason to have to step down because you went to parties during COVID. Like, Trump's about to run for president and got caught with classified documents. There's a lot of shit with Biden too. Like, it seems like going to parties during COVID isn't the biggest deal in the world. Market doesn't care about individual businesses. I would say yes and no. I mean, like take example for today, Tesla, even though Tesla's down, doesn't have enough weight to bring down the whole S&P 500, even though it's a pretty big company. But we have seen single companies really send shockwaves through the market, both on the bullish and bearish side. Ones that come to mind, like when FedEx announced that when FedEx's stock went down 20% and they said they like cut their guidance, it was showing that the whole economy of goods was expected to come down a little bit, and the market reacted to that. So I do think the market cares somewhat about individual businesses, depending on the situation, depending on the business. Shelly, why are you talking in the third person? Be a normal person. So I don't know. I don't really know what to make of the UK situation other than that they need some help. I don't know where they're going to get it. Market doesn't care about individual. You're talking about like small businesses. No, I wasn't saying that the market cares about that. I was saying people were saying like it felt like that was kind of part of the doom and gloom that was out there. There were people out there that were saying, but pubs might be asked to close so that, you know, people's homes can stay powered because they're not going to have enough power to do both, have businesses and pubs powered and people's homes at a reasonable price. And I was saying, I don't think that's true. I don't think in 2022 we're going to be in a situation where, you know, places in Europe are going to have to close. I was saying I just don't think that's true. I'm not saying the market cared about that. BTU halted. Oh, holy cow. See, I'm glad we got people like Jay Rice and whatnot. And did it halt to the downside, upside? Is it just halted where it is? It looks like it's spiked up off the open, trading around $24. BTU is Peabody Energy, one of the biggest coal providers in the world, headquartered in St. Louis, Missouri, my hometown. All right, guys, I do see Mr. Steve Kalyjian hanging out backstage with us. So whenever he's ready, we'll go ahead and give him our special intro. bring him on the show, see what Steve's been watching, see what he thinks is going on with the market, both today and just in general, kind of these days, because it's been a minute since last Thursday since we've talked to Steve. So without further ado, let's go ahead and give him our Zinger our Zinger Nation welcome special intro. Bring Steve on the show. Mr. Kalyjian, how you doing today?
Hey, good morning, Aaron. Good morning, everyone. How are you?
I'm good. I'm good. How are you?
Great, great.
So let's start
here in New York, but
oh, I know you're telling me here in Detroit, it's getting it's like quickly becoming both a pullover and then like a coat over the pullover to get to the office. It's not just it's getting pretty cold pretty quick here. BTU is trade. Sorry, we just had some breaking news on a stock, so I'm gonna try to get my Benzinga Pro up and figure out what the news is. What have you been trading, man?
Well, we had big buy reversals today. We caught a great bunch of longs on the S&Ps this morning, Nasdaq. Great pullback here around the 1050 time period. S&Ps ran about 13, Nasdaq ran about 45.50. So this is a good market. We got what's called the buy reversal day. On all of my big caps, Microsoft, Nvidia, Amazon, Boeing, Goldman, all the big caps, Square, Roku, Apple, and all 4 ETFs, the Diamond, Spiders, Hughes, and Russell. Again, we're in this range here, 35 to 3,800 on the S&P. We failed at 3,800 and we went right down to 3,502. I just keep saying the same thing over and over every week. I just think we're going to continue to make lower highs. We're nowhere near a bull market. I think we're probably anywhere from 8 to 10 months away from that never happening, going into 2023, maybe up to a year from now. But I just think that there's a lot of uncertainty here. I think that there's a ton of overhead resistance, and before you could penetrate that wall, you have to come down a lot lower, base, and then break out of that, and then eventually that overhead resistance will be a non-event going up once a new bull market starts. But I can't get excited. I mean, I saw the video like last week, like around the 110, 108 level. I mean, Tesla was just about to break 200 today. I had told people look to buy it around the 201 level. Never get the low as 202. I don't think Tesla's out of the woods. I think Tesla's going to like the 165, 175 range. Like I said, I think 2023 is going to be a horrific year. I think that the lows probably 80%, 85% are in for the year on the S&P at that 3502. Want to see if October gives us one more push down to a higher low, and then we kind of base or rally a little bit between now and the end of the year. I just think 2023 is going to be a brutal year.
Yeah, I guess just humor me. What would you need to see to, I guess, change your opinion and get you more bullish? Would, like, if the S&P took out this previous high that we hit in August, would you see that as bullish? Like, what would need?
Yeah, it's all monetary policy right now. It's just the Federal Reserve. You have 30-year mortgages at 7.25%, 7.5%. It's kabushing the housing market. And so, this is not good for our national debt. We're paying high interest here. So what the Federal Reserve did with this lack of, stepping on the brakes of inflation and the government spending that caused this, and they're blaming it on COVID and all this supply chain nonsense. But I think personally, to answer your question, you need mortgage rates down. I don't think the market's going to have a bull market with 7 to 8.5% 30-year mortgages. I just don't see it.
Yeah, I hear you. I mean, like you said, it's monetary policy. I think like the mortgage rates are going to be determined by the overall Fed fund rates, the interest rates, and we don't have any confidence, any conviction those are coming down anytime soon. I think you are seeing around the world certain central banks having to intervene somewhat. I think I saw the Bank of Japan had to start buying emergency bonds, so certainly something to keep an eye on. I think we're in a better economic position here in the US than a lot of countries around the world, which gives the Fed more power, more ability, more leeway to be able to raise rates more for higher and longer than what we might see in other countries. So
remember, we have $34 trillion worth of debt. And every time he raises rates, it's, that interest taps into our money coming in. So what are we taking? $4.5 trillion of tax revenue in the United States. Now you start eating away, $750 billion just in interest. It's less spending, less to have in the economy, even to pay the debt. So if you're going to keep raising rates like this, it's going to have a significant negative impact on the federal, on the interest, on the money coming in from taxes, right? 4.5 trillion we collect per year. So you think about that. If when interest rates were, 0 to 1/4%, you didn't have to worry about that they had money to use up. Now take, 600, 700, $billion of that money and to pay interest.
Yeah, no, I'm in agreement with you 100%. So I mean, we'll see. I think my only, a kind of bold case from here is that I think a lot of I think the market knows that the Fed's gonna have to keep rates for higher for, I think a lot of this is priced in. I think really the downside risk here is that it's worse than expected. And next thing you know, we're talking about 5% rates into mid next year, whatever. And I don't know if that's likely. The bond. I don't think the bond markets are really saying so. So.
Oh, bond market got decimated here. They were trading 144 about a month and a half ago. They're 120 below 122.
On which one, the TLT?
No, in the 30-year bonds. Well, the TLT's got absolutely decimated. I mean, look at the TLT chart. I'm thinking 93, 95. I would start looking to buy them for a long term. Even if they got down to 85, 88, I would just buy them. Because once the Federal Reserve starts cutting interest rates, these things are going to explode.
Yeah, no, 100%. I mean, you can see this long term. I mean, we're going back to levels we haven't seen on the TLT.
What's that low right here? What's that low right here? You see it right here. Keep it right there. One more over. Left.
Right
left.
here?
No, one more to the left.
87.
No. Go over one more, like 5, 6.
To the left? Go over to the left?
Yeah.
Here?
Right in the middle. Right there. What's that low right there?
About 87.50.
Mm-hmm. That's what I said. Either 85 to 90 or 88 to 90, 93 range is where they're going to go.
Yeah,
they're gonna make a double bottom there.
We're $95 right now, so we've got about I don't know what I just
brings it down to like 118 and a half. On the 30-year bonds, you're talking five, maybe 5 1/4 on the Fed funds.
Yeah, I mean, and again, we don't know what the Fed's going to do from here. We don't know what the Fed's going to have to do to bring inflation down. Powell's come out and said, and other Fed members have come out and basically said, no matter what it takes, we're gonna bring inflation down.
But where was their stance when they make these bold statements when they already saw the numbers 9 months ago and they just sat in their hands?
Yeah, I mean, I think
that's the question.
Yeah, I mean, I don't know. Hindsight's 2020. I think a lot of the members of the Fed would tell you if they could go back, they'd do things a little bit differently. Let me see. I see Jim Trade in the chat saying head and shoulders happen on oil. What kind of chart are you looking at? Are you looking at a daily chart? So Steve, let's see. What about
we had some monster sell diversion shorts today. Monster sell diversion shorts in oil. We had, I think, in oil. We must have had. Let me just see here on the oil. We actually caught the long there just now. We probably about 5 phenomenal shorts in oil today. Phenomenal shorts. See, I have my own software, so I'm able to see it a little differently than what you're looking at.
Yeah, and let me see tradeeasy.com if you guys want to catch any more from Steve. Any names you've been watching that during earnings season here?
We wait for the dust to settle, let them come out. You don't want to jump in front of an earnings report. And like today we saw big buy divergences on Tesla right after the opening. Like I said, we were down around the 201 level. A lot of people bought 202, 203s. But then it rallied. Now we got sell divergences. So I think the lows are in for the day, but I think Tesla's going to that 175 level.
Yeah, I mean, Tesla right now trading around 212. Like you said, got some buyers this morning off the open. Tesla, we have Snapchat coming up tonight. Let's see where Snap's trading right now. Up another 4% going into the earnings. So we can go look on a daily chart here. Snap's, if we zoom in on the last couple days, Snap's traded higher coming up into this earnings. I don't know. What do you think about Snap down here?
I don't know. I would wait for the earnings to come out. It's a broken stock here. I mean, I just think that there's so many better names to play.
Yeah.
I mean, Boeing, it just it got that low down to that 117, I think, Boeing, and it just keeps bouncing off that level around there. And we were above 140 today. I'm looking for the markets to push up. I'm hoping so you can get long these like TZAs, SQQQs, or the STSs, because I really do believe that there's a lot of downside to come in 2023.
Does Boeing pay a dividend? I mean, the stock's like dirt. I feel like the stock's dirt cheap down here. Price to sales 1.3. I know the company has a bunch of problems. I know that, but it's one of two companies that produces planes with Airbus, right? I mean, you got to think Boeing's not going anywhere.
No, I mean, but I still think that you want to have a flush out, and what's going to create a new bull market is a flush out, a base, a little push more down, a base, and then right back up. And we're far from that, in my opinion.
Yeah. All right, well, Steve, you got anything else you've been watching? Anything you want to chat about?
I am looking for the mark. Wow, look at that. Wow, we just caught this great short. Oh my God, S&P just dropped for 15. I'm looking for the today. The trade of the day should be the 15-minute buy setup, and I think that should happen between now and 2:30. And then if we get that pullback, which we're getting right now, I think that the markets are going to push up higher this afternoon, but I think it's going to be short-lived.
Yeah, I mean, I think right now any rally we see, like you said, is going to be short-lived until, or at least until we're not so hawkish on the Fed. Hard to imagine we're going to be able to sustain any sort of rally until the Fed is at least a little bit less hawkish.
And I don't understand why they got to talk every single day, though. They constantly say, who asked you to talk? We already know your position. You missed the boat on interest rates and you completely screwed up. And now every day it's 3, 4, 5 Fed governors talking. For what?
Yeah. I don't know. Like you said, nothing's really changing right now. I mean, the only things that are going to change are if we get lower than expected inflation numbers or economic data, or on the flip side of that is if things, you need one of two things happening, either these like good things like inflation coming down or something like that, or on the flip side, something bad happening, something bad breaking, some bank going to be in a lot of trouble, whatever, until the Fed actually is forced to intervene. Until that happens, until one of those two things happens, it doesn't look like inflation's, coming down super quickly at all. The Fed's going to stay put. The Fed's going to stay course.
100%.
All right, Steve. Well, I've got that link in the chat, tradeeasy.com. Everyone go check out more from Steve. Steve, enjoy the rest of your Thursday and have a great weekend, man.
You too, Aaron. Thanks, everybody. Aaron, take care, everybody. Bye-bye.
Of course. Brian saying short oil until the election. Short oil. I've been saying this. I'll keep saying it. I sound like a broken record. If you're in that camp where you're like, upset that people, you think that we're in a clear recession right now and some people just haven't accepted it. Short oil. It would be an easy trade if we end up in a real, and I'm gonna say there's a real recession, because you're gonna say, oh my God, Aaron, we're in a recession. Wake up! We had 2 negative GDP quarters in a row. I'm not gonna call it a real recession because we've added jobs, we've added, production growth. If you think we're heading that way, then oil's an easy short. Go back to look. We're looking at USO, the United States Oil Fund. We can go back and look at it in 08. It's not like wow, this thing must have went through some reverse splits or something. It was 950. It went down to 172. If you think like, oh, oil's safe, it's not going to move that much even in a recession, you're wrong. This thing's going to absolutely get clobbered if we are heading toward that. And it seems like increasingly, like, everyone is saying so. And it's funny because I think for a long time, you were a contrarian to be a bear, to be short. But now that everyone is saying, and like when I say everyone, it's not just like everyone on Twitter, everyone on Reddit. When you have like, people like Jamie Dimon coming out and saying like, oh yeah, things are going to get tough. We're pretty much like, or a recession's looking pretty likely. The contrarian take is that, hey, things are going to be okay. We're not, the sky's not falling. And I don't know. I mean, I'm a literal 5-year-old. Add 20 years to that, maybe. Thank you very much, Shelly. Short oil after earnings, October 27th-ish. Not asking for advice, financial advice, just talking. Wait, what? I'm 34. No, I'm not actually 5. Going to the NORAD bunker. All right, I don't know. I'm not short oil. I wouldn't want to be short oil because I'm more in the camp that I think like demand. Like I don't think that we've seen. All right, let's go back to gas prices. Like the fact that gas prices have come back up to me is proof enough. And I know you can tell me like, oh, it's not just related to demand. It's about the supply and OPEC was cut, all this yada yada. But in a real scenario where the economic condition would have worsened significantly over the past couple months, which that happens in a recession, right? Things get compounded, they get worse. I don't think gas prices would be able to come back up in the way that they have because it's showing me that demand is still there for fuel. People are still driving. People are still driving to work. People are still going places. So if companies, the week average a week ago was almost $4 a gallon, that's historically high. So when these companies report earnings, your Chevrons, your Exxons, they're going to report good quarters. And it's going to be more about the outlook. They might say, oh, we expect. I don't think they're going to come out and say anything like that would be bad. They might say, we don't know, right? Gas prices could remain this high for a year. They could get more expensive and we could make a lot more money, or they could come down. I don't think they know exactly because I think it depends on the macro outlook of what's going around the globe. They probably have better insights than most companies do about the demand for oil and gas and what's going on there right now. But I wouldn't really want to be short oil. Here, take my advice. I sure don't use it. Are you talking about me? Maybe. Brady, do you even see the diesel inventories? Yeah, weren't the inventories? See, but that's the thing is like, the inventories being up were high, we're seen as a good thing because it was seen as like, okay, maybe the Fed's interest rates rising are working, that the economy is slowing down. Did I? Maybe Steve Kalyjian said it, and I just agreed with him because I didn't really feel like arguing. Oh, diesel inventory isn't up. I thought inventories went up, and that was right. Oil companies printing money with oil over 60. I would not want to be short these oil companies unless it becomes increasingly clear to me that we are heading toward that recession. And in that case, then I think we will see the oil companies react similarly to the way they did in 08, 09, which was come down a lot. But I'm not sold on that right now. And you can call me silly, stupid, I'm ignoring signs all you want. I think if you're sure either way that there is either going to be a really bad economic recession or downturn, I think if that's the camp you're in, that you're 100% gun-ho on this, that there's no way up from here, we're 100% going down, there's a big global recession coming, I think you're ignoring signs that contradict that, ignoring data that contradicts that. And the opposite is true too. I think if you're sitting here saying everything's roses and peachy, I'm admittedly more bullish than I think the average, person is out there, but I'm not going to sit here and say this is a generational buying opportunity. I love everything right now. I'm super bullish. I'm not there yet. I'm in the camp of I don't really know. I think we could see a major recession, certainly a possibility. Would you ask me if I would be absolutely shocked if in 6 months from now, the market's up 10%, things are going well, and we're not really talking about a recession anymore? I wouldn't be shocked at all. So I could see both ways. I'm seeing kind of the data, and it's a confusing time for macro. I think even a lot of economists that have been studying finance and central banks and stuff for years and years and years even say the same thing. It's a confusing macro environment. I mean, you don't have a lot of times historically, right, where we saw bonds and stocks going down at the same time. You have economic indicators that show strength, adding jobs, but then negative GDP, right? It's just oil demand up this winter, irregardless of recession. All right, not to be super I don't know, this might turn some people off. Just so you know, I'm not trying to be super grammar snob, whatever, but just because I would want to I don't think irregardless is a word. I think you can just say regardless. Regardless means the same thing. Oil demand up this winter regardless of recession. I don't agree at all. The oil companies make too much money per Uncle Joe. I also don't know what that means. Oh, Uncle Joe Biden. Brandon. My guy Brandon. The oil companies make too much money per Uncle Joe. Yeah, I don't know. I don't know. I don't want to get into the politics of it. I don't think it's easy, I guess, for Joe Biden to say the oil companies are being greedy and making too much money, and then they don't not going to change any policy or anything. They did try to do some sort of bill about price gouging in oil and in gas, and I think certain politicians weren't about it because they're taking money from the oil companies. Think about it. If you're in charge of making decisions and people are like, hey, we should figure out how we can stop these companies from price gouging, get cheaper gas for everyone, but those same companies that you would be going after are paying you, you're going to be like, oh, no, I don't think that's a great idea. And that's basically exactly what happened. They've been making too much money forever. Yeah. Speaking of this, I think this will be a good transition. I think this will be a good transition if I can find a tweet. So, how did I find this before? Oh, I found it. I'm so good at finding tweets and stuff. One of my good skills. All right. This comes from Michael Smith, MJ Smith 55555. Dad, money manager, optimist, realist. I'll tell you this. He's got 753 followers. It's almost, I think, to the number exactly how many I have on Twitter. Only following 58 people, though, so he's got a strong ratio. Got to give Michael Smith credit for that. I don't know this dude. He, I judged his content rather than his, reputation or credibility. First of all, if he lives in Connecticut and he's a money manager, he's probably doing all right for himself. So he's probably in, I don't know where Westport is, maybe some suburb of Greenwich, maybe commutes to New York City every once in a while. But he seems like he's seen his fair share on Wall Street. Seems like he knows what he's talking about. Again, I don't know him. Came across this Twitter thread last night. Thought it was really informative. Liked it. So we're going to go through it. So the problem with the U.S. stock market and the economy, What did I say? The economy? The economy illustrated in one earnings report. Here's my simple takeaway from Procter & Gamble's PG earnings report released today. All right. So this is a large, global, extremely well-managed company that operates in a pretty stable part of the economy, consumer staples and healthcare, and is well analyzed by most Wall Street investment firms. So we are not talking about a small company in technology. Consider the following observations. Earnings rose 2 cents, I'm going to guess per share, 2 cents per share in the quarter. Sales rose 7%, and that was 2% above analysts' expectations, so pretty good. And again, if you're not familiar with Procter & Gamble, maybe you're not in America or something, but it's a huge conglomerate, right? Johnson & Johnson, baby products, razor, just basically you go to a Walgreens or CVS, half the shit in there is Procter & Gamble. Sales rose 7%, and that was 2% above analysts' expectations. Volumes fell 3%. So that is quite a decline in toothpaste, razor blades, and diapers. Margins fell 1.6%. If everything remains the same in the reporting quarter, margins are a direct impact to profits. The only way to have higher sales growth than volumes, to have higher sales growth when volumes decline is to raise prices. So here's the key here. Sales rose 7%. Volumes fell. So the volumes, the quantity of goods, right? We're talking toothpaste, razor blades, diapers, all these things. Less of those things were sold by Johnson & Johnson. So say they sold 100 diapers the quarter before, they only sold 95 this quarter, but they made more money. So if you make more money, but you sold less goods, what's the only obvious conclusion? So this quarterly earnings report from one company, the only way to have higher sales growth when volumes rise is to raise prices. So this quarterly earnings report from one company has some important questions for the broader market and the economy in general in the coming quarters. For how many more quarters can the corporate sector maintain or increase earnings by raising prices when volumes decline? What is the impact on the U.S. inflation numbers? Rough math from the Procter & Gamble report says sales at plus 7% with volumes minus 3% equals prices at plus 10%. So basically, like what Michael Smith is outlining here is showing that we might see a good earnings report, and without looking into it, it could literally all be because of inflation. And this system is not able to sustain itself for long, because if you think about it, on one side, okay, you have the good earnings report, which is good for the stock, but then you have that earnings, the reason that was driving that earnings report to be good is because you raise prices, which is going to drive inflation, CPI higher, which is going to make the Fed more likely to raise rates and which is going to be bad for the stock. So you can't sustain this cycle forever. The question that Michael's raising here is, how long can this last where companies are able to raise prices to mitigate falling volume in terms of sales to see, or to try to show investors, oh, everything's okay. Everything's all right at Procter & Gamble, or sales were actually up 2%. Yeah, I mean, if they would have just come out, if they would have said, yeah, we kept prices the same, sales dropped, we made, X amount less money, the stock would be down right now. But maybe that gets us closer to when the Fed can lower interest rates. And I think pretty much the same can be said true about the oil and gas companies. We know oil and gas companies in their current state, right, aren't, we wouldn't call them growth companies. They're steady. They're value companies. They make cash, but they're not growth. They're not growing. How can you grow? How can the share prices grow if the companies aren't growing? The prices can grow. And when the costs don't, which is what happens when oil is expensive and they're able to charge $4 a buck a gallon, they're spending the same amount of money shipping the gas from X refinery to this station, whatever. They're just making more when the money's up. So you can ask the same, or when gas is up. So you can ask the same question: how long can that last? How long can gas prices just rise and these oil and gas companies make more money before that system is unable to sustain itself? Catching up the chat here. Oh, PNG is global. I think Martha Stewart lives in Westport. Maybe. J&J junk and junk moves slower than frozen oil. Yeah, I mean, I don't think people are trading Procter & Gamble and Johnson & Johnson for quick moves. You know, they're not Teslas. The U.S. Federal Reserve has told us repeatedly that getting inflation down is their key objective, and they intend to continue raising rates in a slowing aggregate. So I don't know. It is kind of it's just like shitty, and I don't know if there's a solution from a policy or monetary policy standpoint. But it's shitty that interest rates rising hurts everyday people. There's no doubt about it. From layoffs, from increased mortgage rates to financing cars, makes it more expensive to borrow money. There's a million different ways interest rates rising are bad for everyday people. But companies like Procter & Gamble are fine because they can just raise prices. They have the pricing power there. People fasting now, though, so they can save to fly. I don't know what's going on in the chat. Benzinga needs to interview Martha Stewart and ask her for his stock picks. Benzinga win Tom Lee. Would you want to make 10 plus years investment in drilling when the government says they wanted to take you out? No, but I don't think. I've made this point before. I'll make it again. From the oil and gas company executives themselves, not from me, not from Aaron Bree, not from some woke company on the left. From the oil and gas company executives themselves, the thing that's holding them back from expanding production is the investor side, is the capital side, not the government, ESG, or not, that side. So they're basically saying in free markets, our company isn't growing. Demand for oil isn't growing. Demand for different energy sources is growing. Demand for our energy is not growing. So increasing production would not be good for our bottom line. It's as simple as it is. That's what it comes down to, is the capitalism aspect of it, in that the company will do what's best for its bottom line. And for oil and gas companies, producing more right now is not good for its bottom line. It has nothing to do with the government. Something tells me Martha Stewart isn't allowed to discuss stocks, just paint color, etc. That's not true. That's not true. Oil production, U.S. by year. It was going down. Maybe it only started going down when COVID. Let's see. I guess. Well, no, here. So, well, I mean, I don't know, because oil production's still going up now. But I'm going from, what was it? U.S. crude production oil. So, yeah, I'll give you it. So it was going up. I mean, but I don't know if that doesn't mean they were does that mean they were drilling more? Here's where I'm going off of. Fed did this is from the Dallas Fed doing a survey of oil and gas. So this is actually interesting too. Like what would the WTI crude price necessary to get publicly traded U.S. producers back into growth mode? And basically, if they said if most of the respondents said that oil above $80, some said in the $100 to $120 range, would get them back into growth mode. So there are a lot of people think that the government should intervene and basically say, hey, we'll buy up any oil for our reserves at $80 if the price gets down there, basically put in a price floor at $80 so that the companies can feel free to produce more, thus bringing the supply up and cost down for most people. So which of the following is the primary reason that publicly traded oil producers are restraining growth despite high oil prices? So to Hurt Scrambler's point, some said government regulations, like less than 10%. Some said lack of access to financing, but most, almost 60%, and again, these are our executives from 132 oil and gas firms, investor pressure to maintain capital discipline. And that was the case, I believe, under Trump too, right? That there's pressure from investors to maintain capital discipline, i.e., hey, we're making good profit margins right now. Why screw that up by spending more money to produce more when we can just keep doing what we're doing and make good money? Check chart on exports. This has been going on since. Yeah, I think the theme, and I don't know, maybe I'm wrong about maybe they did do more drilling under Trump than Biden right now. I honestly don't know. I'll have to look into it. Okay, but again, my point is I think these themes, I'm talking about politics aside, I'm just talking about the economic themes, right? We're investors, we're venture capitalists, right? Pumping money into oil and gas, and okay, if we produce more, we'll make this much more money. I don't think so. I don't think that's been the case for a long time. And I understand less regulation equals more drilling. I don't know if that would make, I think if they go completely laissez-faire here, you'd still have the same issue where from the investor side, from the capitalist side, they say, well, why would we put $100 million into ExxonMobil to drill more oil right now when demand's rising for other, energy sources, and we can put that money elsewhere? I don't know. I could be completely wrong about it. I don't know. I think that theme of money flowing out of oil and gas and into other industries, specifically energy, has been happening. Why do you think so much venture cap? No one. I don't know. I mean, I think that's been going on long before Trump and Biden were in power. But I digress. Time to get into lithium early and precious metals for building batteries, nickel, cobalt. Yeah, the lithium trade, I will say, got in here. We'll pull out my Benzinga Pro pull back up. The lithium trade, I think, got very crowded during COVID. I think as part of the EV, I don't know. That was such a crazy time in the market where every single EV company, like, there were companies I didn't even know, like Electra Mechanica, whatever, like all these weird companies, were just going crazy. And the lithium, definitely got swept up in that. I think there's an ETF just called LIT. You can see, I guess it's actually hanging out. I would have expected this to have come down a lot more. But yeah, you can see how parabolic this thing went from COVID lows of $17 on the lithium ETF up to about $100 back in November 2021. Lithium, definitely. As far as precious metals go, one that I'm looking into or considering building a long position in is start getting some exposure to the copper. Because copper actually, not only in terms of more traditional industrial, I think in terms of, people used to have like copper pipes and people would steal them from houses being built and stuff. I don't think copper is used in the same way a lot in like houses being built, but copper is now being used kind of like lithium in a lot of clean energy, a lot of electric vehicle batteries and whatnot. And copper, I don't know, could get interesting. Someone stole your copper antenna. Yeah, copper's freaking expensive. LNG, liquid natural gas. Yeah, we were looking at you have that's Cheniere's ticker, but what's the fund called? I mean, I know you have boil and cold. What's the fund called? UNG? Yeah, United States Natural Gas Fund. I don't know. I mean, I've said it before. I'll say it again. I think natural gas has see. Then that's okay. Right there. Yeah. LNG or the ETF is UNG. I'll put the ticker up on the screen. Okay, like take example. In a world without regulations, right? I think more money's flowing into like the natural gas industry than the traditional, drilling for crude oil. All right, let's see what yeah, Sawyer, this is the oh, sorry. LNG is Cheniere. UNG is the ticker I'm on now, the ETF. I think it just gets you exposure to different natural gas. Oil coming back from the dead today. Let's go look at it on a 5-minute. Yeah, man, this thing opened down. Let's see, down at 35 down here. How are we doing on the overall market? I haven't even checked. Oof. What happened? What'd you guys do to the market? My market. What'd you do? Yeah, market's getting kind of shebanged right now. I don't know what happened. Did someone speak? Fed comments, Bill Haddad is saying. Fed comments. Who was it? Let's go. I'm sure it's in the news feed. I get live updates from the news desk here. There's no better we had some Fed comments. I just got word from the Z-Man, Zunade. They might hop on with us for a few sec. He's going to talk about a webinar he's doing with Humble Trader. What up, my man? Zunade hanging out in the chat. Like that Black Mirror episode? What are you talking about? I was going to chalk it up to an RSI Kula. For real, someone spoke. I think it was just some Fed comments. Why don't we just buy a Peloton, put a generator on it, produce our own electricity, and charge some batteries, pedal power?
I was waiting for you to add me, but you didn't add me.
Oh, what's up, Zunade? How you doing?
Good. How are you? Thank you for allowing me to come on your show today, sir.
You're welcome. I was checking Slack, actually, because I was checking in Slack from Bill, who's way more important than you.
He is.
He said
I
Fed's
agree.
Harker says Fed has made disappointing progress at lowering inflation, which, by the way, I did. You can go back, watch some Benzinga lives right around when the Fed started to really raise rates. I was saying, and it wasn't my original take, it was a borrowed idea, but that a lot of the inflation we've been seeing is from the supply side. Raising interest rates isn't going to do anything to change that. And I've actually kind of changed my opinion on that, because I do think a lot of, like, if you look at like where you have seen a lot of prices coming down in certain commodities, I think I don't think you can't say that none of that's from the Fed raising rates. Some of it has to be, but I did call that from the get-go, that it's not like I didn't think the Fed was going to raise interest rates and inflation was just going to come crashing down.
That's, yeah, I mean, I am not going to sit and pretend like I know what any of that means.
Okay.
You know
That's
what I
fair.
mean? Like the macro stuff and all the high-level stuff, bro. You know?
That's fine. So
Oh, is that your key badge there?
Oh yeah, dude, I was actually thinking about it today. Like, using a badge to unlock the door to get into the office building is such a like mundane task that I do every day. But when I was 5 years old, like, if you would have told me that I got to like do that every day, I would have thought that was so cool.
Oh, for sure. Because you're like, oh my God, like only I can get in with this access that is only registered to me.
Yeah, and just like the fact of like putting a card up to the reader, hearing the beep and the door unlocking, and like the whole aspect of it, it would just
Beep,
be,
beep.
I would just be like, that would be like I would think that would be the coolest thing in the world when I was 5 years old. And now I do it every day and don't even think about it. But I did think about it.
You do have a cool job, though. You literally are covering the stock market, which is a pretty badass job, my friend.
Yeah, 100%.
I am here, though, to bombard your stream to talk about. Oh, we just putting it right back up. Okay, thank you. Hopefully no Slack comes through. You know what? Let me stop sharing this because sometimes Slack will. You know what I mean? We can't have that happen. Let me just go ahead and share that.
Okay.
Here we go. We've got a Benzinga Pro webinar with Humble Trader. So I need to let you guys know about it. And you guys can also click on the link that is in the chat so that you can go ahead and set a reminder. You're going to have Humble Trader that's going to be doing a webinar alongside our main man, Ryan Faluna. That's going to take place on October 26th at 2 p.m. Eastern. So go ahead and hit that YouTube link that is in the chat. Notify me, hit that reminder, put it on your iCal, put it on, if you're using Android, I guess you're welcome as well. But yeah, make sure you guys put that in your calendar. Check us out. It's going to be a lot of fun. Humble Trader is going to talk about her favorite indicator, the importance of volume, her favorite time frames, her strategies, and all that stuff. And it'll be a nice little Q&A type stuff. But I appreciate you, AB, for letting me come on and take over the show for 2.3 seconds.
Yeah, I really like Humble Trader. I watched a lot of her videos. I have a kind of embarrassing story where so when we were in
Should
Vegas,
you share it on air?
Yeah, I mean,
okay,
it's
that's fine.
We were in Vegas for the FinTwit conference back in May. I was out with after one of the days of the conference with like Jake Wujastic, some of the other some of the other people that were there from different companies or whatnot.
Yeah,
and she was with us in like a bigger group, and I didn't like put two and two together, even though I had seen a lot of her videos.
Right.
And I don't know. I just like I realized it was one of those things where I didn't even end up talking to her, but it was just one of those things like after the fact, I was like, oh, that was Humble Trader. Like, oh, I'm such an idiot. I could have talked to her about like coming on the show, like all this stuff, and I didn't.
That's okay. I got you. This is why we're a team here, because you couldn't get the job done. So I'm going to go ahead and do it for us. And I went ahead and had Faluna help out because he is the maven of Benzinga Pro. But yeah, no, seriously though, I'm going to put the link one more time in the chat. Look, my job is on the line, right? So I need a big attendance here. All right? I need a lot of people to come to this webinar, check out Humble Trader. I'm putting all my eggs in one basket here, AB. So I need a big turnout. You know what I'm saying?
Yeah, I love it. Shelly's asking Zune, does AB share a lot of things that can't be said on there?
Yes, he does. But, you know, sometimes there are limits, and I just don't know where he was going with that. So I had to make sure.
Well, it was one of those things where I probably shouldn't share that.
See what just shut up, bro.
Oh,
yeah.
man. All right, so we've got about 25 minutes. We've got
right.
about 25 minutes left of the show, Zunaid. What stocks you want to talk about?
Well, here's what I'm trading, and I wanted to go ahead and get a lot more size, but unfortunately, I don't think I will be able to. Give me a sec. I can share my screen in a moment here. Oh, man, come on.
My portfolio is kind of down bad today. I had Tesla puts that didn't do shit. And I had TQQ.
Bet you didn't have stop loss either.
I didn't. I had TQQ calls that have been up all day that are now down 40%.
I am in PXMD. I thought I had 500 shares, but mistakenly I forgot to type one more zero. So I am not. I'm only in 50, but I'm ready to buy 4,000 shares if it comes down to VWAP. And I can go ahead and try to load it up to the upside. But I was down earlier. I was down about $550 for live trading. Now I'm only down 400, so I'm making progress in my life.
Should we buy snap calls?
I don't know about that idea. I'm not sure.
Didn't we try that before and it didn't work? Or no, you bought snap calls, I bought snap puts.
You and I went in different directions.
All right, so let's do it again with snap.
Are you serious? All right, you know, I like it. I like tradition. What are we looking at before I hop on?
I mean, let's run it back. I bought calls
so same thing.
Time.
Well,
you
so
bought
here's the thing.
puts.
It's because I let you pick what you want to do. So in similar fashion, AB, what would you like to trade?
I'm gonna buy put, or I'm gonna buy calls. I'm gonna buy calls again. I'm gonna double down. What?
You're gonna buy calls. I'm gonna buy puts. Let me go ahead and holy shit, snap.
No, I don't. I changed my mind. Oh god, it's so disgusting. Buying calls on Snapchat is so disgusting right now. There's no way the company comes out like they're gonna come out and say advertisers are spending less money with us. Like, there's no way they say anything good, right?
So you going puts?
I don't know. No. All right, fine. I'll buy one call. I'll buy one cheap call.
All right, cool. I'll buy one cheap put. You let me know what strike you're going, and I'll try to match the derivative side of it. Go ahead.
I'm gonna buy.
I'm also
Remember,
short Google.
It
here,
went
but
from it went down like 50% overnight. So I'm gonna.
it was like a
just-
solid 25, bro. It was terrible. Matter of fact, we can check it here on the chart.
I know. Well, I don't know which one it was. It was.
Oh, bro, it was the last one. It was just the last one. So it
You
was.
can see it right there on the chart.
No, this is it right here.
Yeah.
Right here. So Snap went ahead and dropped. So he had calls, I had puts, and Snap went from $15 to 11, 28% to the downside.
All right. So
I'm pretty sure it's that one, or was it this one here? The 21 to whatever.
there was
Either
even
way,
a big. There was an
use
even
these
bigger
stocks.
one. There was an even bigger one where the stock dropped like 50%. Or no,
I don't know. If
even
it's
though
50.
it's
Oh,
the
it might have been
upside
this
to the
one. It might
upside.
have
There
been.
was one earnings report.
It
when
was
we
to
went
the upside. It was upside. Yeah, it was
Yeah.
definitely upside because I think it was like no one expected it type nonsense.
Right, because it was right after Facebook's earnings. Facebook gave a really bad report, and Snapchat reported like the next day, and it was actually like,
Yeah.
decent. And
Yeah.
the stock went up because it went down on
Expecting
on
for
Face-
Facebook to on
on Facebook's the stock went down like 30%, and Snapchat's report was fine. All right, I'm gonna buy a $14.50 call that expires tomorrow.
$14.50 call. Okay. Oh man, if you're gonna do 14, I'll just stick at the money then. I'll just buy one single contract. All right, I am in the $11 puts expiring this week. Got filled at 105.
Oh man, you bought a more expensive one than I did.
No, that's fine. It's $100. We'll just ask
Um,
Benzinga to
Damn,
reimburse
look
us.
at Twitter. Twitter's popping off. I
It's not gonna be
like
higher than there you go.
I like buying some puts on Twitter here just in case something happens with the deal, right? Make like an $100 bet on some.
The
puts
main
that
thing
expire.
is how far out are you going to go in case something bad happens to Twitter?
I'd be willing to go out like to the November monthly. It's like November 18th. If I'm looking at like because if something goes bad with the deal, the stock's gonna go from 50 to 40 real quick. So I can
It's
buy
not a
some,
bad bet. Yeah, you've
I
got to
could buy some like
Good.
$40 puts for 50 cents.
See, to me, I would rather go ahead and pay $1.20, I'd rather just spend double the money and go with like a $49 put, even though it's like maybe $1.20 is what you're gonna get in the mid price.
See,
Simply
I-
because you're gonna get a shit ton more money if your move works out because you're in the money.
Yeah, but my thought process on if something does go bad with the deal, then you get that like instant
IV?
drop down to. There's no way it's only going down a couple bucks, right? The only reason Twitter's even trading above $40, let alone at $53, is because of this deal. Without the deal, Twitter would probably be trading at like $20 right now compared to what the other social media stocks have been doing.
Yeah. No, I hear you. Yeah, I mean, it was around 42 before we knew about him accepting the deal or whatever the hell he did in life.
I got a $12 October 21 for only 75 cents. Call. Nice.
Yeah, I
know.
paid about $1.20 something. What did I pay? Oh, let me check. I paid $1.05 for the $11. But all right, man. I appreciate you hopping on again in the chat. I'm gonna post a link. Would love it if you guys could save me and my job. I like working at Benzinga. I'd like to continue working at Benzinga. So if you guys could go ahead and hit the notify button on that link and check out Ryan and most importantly, Humble Trader on October 26th at 2 p.m. Eastern. That would be lovely. And
When is that? Next Wednesday.
I believe so.
Next Wednesday. Why are you talking
Yes.
like that?
I don't quite know. But it seem like a gloomy day behind you in Detroit, Michigan.
It does. It is. It feels like
Yeah.
London. Feels like London.
Oh no, especially that's the reason I never wanted to move to Seattle, because of the gloomy days. Just don't think my mental could handle being depressed 24/7. 23/8 or 23/6 I can handle. I need 1 day of happiness. I don't know what the hell I'm doing here on air. Can we
Yeah, I don't
delete
know
this
either.
VOD?
Huh?
Can we delete this stream?
We could edit this part out.
Yeah, let's
Probably.
do that.
I don't think was that a British accent?
I believe it was, but it was also like a sassy British accent, as if I am part of the elite of the elite.
Yeah. How do you feel about Britain, like in general? Don't you have some grievances with them?
Are you saying that because Indians were slaves to them?
No, because you're American. You live in the U.S. Like the U.S.,
So,
UK. Like we broke off from them.
bro,
No,
I
I'm
don't-
kidding.
I don't-
I was saying
I was
because
gonna. I was like, where are you going with
because
this?
of the Indian thing.
Whatever. I'm short Google. Waiting for that trade to come in. Dude, this trade station. So I was telling the chat earlier, and I'll leave after
Oh, do you
this.
have a TradeStation account?
I do now. Yeah, I moved funds back, and like I'm
I
trading like
want
much
to.
smaller
I
size.
want to build an algorithm in TradeStation.
I don't know how to do that, but that sounds fucking cool.
Can I
Sorry
do
for
it, though?
cursing. Can you do it? I believe in you. Actually, no,
No,
I
no,
lied.
I-
I don't
no,
think
no.
you can. I think you can hire someone to.
No. Wait. Well, first of all, how hard can it be? It's an algorithm. I mean,
Do you know how many languages of coding there are?
No, dude. TradeStation has their own. It's like called Easy Code or something. They literally try
Wait,
to
really?
make it as. I think so. Well, I'll figure it out. I think I'm thinking of the right thing. TradeStation, easy language. Yeah.
I do see that. Oh, what is this? Hang on a second, brother.
I'm telling you, I have an idea for an algo that I'm gonna run, and I don't know. I mean, if it works, it works.
This is interesting. I haven't looked at this one.
All right. Well,
Easy
I'm
language.
going to. How do you have to? Do I have to like pay for a TradeStation account to build my algo?
Bro, I don't know. I've never done it.
Well, I will.
Junaid sassy wearing shorts. Yeah, listen, I never said I was like a well-dressed one. By the way, it's time for me to get a haircut today, and I'm like a little scared because you can see more of my patches, but it's fine.
Did you ever check out this shit that I sent you?
I did. I read that. I did. It made me a little bit
What?
more confident of where
Yeah,
my
see?
situation is because mine's not that bad compared to some people.
Oh yeah. See,
Um,
that's what I was trying to tell you right when you were talking about it. I was like, you're 30. Your hair's great for 30.
Yeah, but like this part, it's freaking me out. Not gonna lie, but whatever. I gotta go get a haircut today because I've got events coming up and I have to look pretty. But there is the market to the downside.
Yeah, Seattle local government officials are more disliked than the weather. BT Dubs apparently from JRP. Sawyer says he's 31, bro.
I am 32.
Damn.
32.
Damn, son. So that means you were born in 1990?
I am a 1990 baby, yes. Good math there. I like it. You can definitely make an algo.
You like that quick math? Dude, my algo is going to be freaking sweet, too. I'm excited for it.
Dude, that would be cool.
I have a
My
feeling,
order got filled somewhere. Oh, my.
How crazy would it be, like, beginner's luck if you were just like, yeah, I built, like, my first algo, and it's just, like, a freaking moneymaker?
Wait, did my
How does
stop
that
get
work?
hit?
Like, because I imagine, like, algos, they just have to make money most of the time, right? Like, if like you could build like a stop loss into an algo to where if it triggers a trade, but then it's going against it, it can cut it out after like 10%. But then
Yeah.
if it does that one in every 10 trades, but then the other 9 it's making money, it should work out, right?
Yes, that is how it should be. I agree.
Yeah,
let's have some
I'm not even gonna back test mine. I'm just gonna let it rip.
Yeah, no, of course.
How do you fund
who,
it? How do you
who
fund
likes
it?
to who likes to back test things? Just go all in, dude. Like, who cares? You know what I'm saying?
If Jim Simons from Renaissance is watching this right now, if you want to buy my proprietary algo before I even produce it, now's your chance because it's only going to go up in price from here.
Oh, dude, no question. What a deal. What a steal. I can't believe it. I can't believe he wouldn't
Yeah.
take advantage of it.
I'll go
To be
low
honest.
6 figures on it right now.
I think I'm going to buy it in maybe 400 more shares. Hang on a
Bree, you
second.
can set that up in your brokerages. It's called a smart stop. Yeah, but not an algo. That's going to trigger the trade for me.
People think you're dumb.
I know. People do think I'm dumb. People don't give me enough credit for.
I agree. Dude, I can't believe they do. By the way, you and I might be hanging out a little bit tomorrow during All Access.
Oh, I thought you meant you were coming to Detroit.
No. I'm not cool enough to have my flights and stuff paid for.
Maybe someday you can come to Detroit.
Yeah, someday would be cool.
I've got swag for you for waiting for you. It got returned to sender, so the box that I totally
Wait, are
shipped
you
to
serious?
Yeah, it's just sitting here for you.
Wait, why didn't you tell me you got returned to sender? I didn't know that.
Yeah, I told
You're
you.
trolling me. I know you are.
Shipping problems. No, shipping problems. I
Yeah, we're
totally
definitely
sent the
trolling.
box.
No, you
I
didn't,
totally
bro.
sent the box, and they totally sent it back.
They trolling me. It's all right. It's fine.
Why'd you take your screen off? Are you doing something sketchy on there?
Yeah. At 12:48 in the morning. That's what I'm doing. Or I guess in the afternoon. Whatever. All right. I'm out. I'll see you guys later. Deuces.
All right,
Bye.
peace, Zunade. I think with that, I mean, it's. I just put Zunade up on there alone. So with that, it's 12:50. Stock market movers coming up here in a few minutes. Gonna go ahead and wind this stream down. Send you guys over there. Mitch has a packed show coming up for y'all. He's gonna be talking to Sadek Wakba, the member of a. Hold on, let me get this title right because this is a mouthful that I want to get right. Sadek Wakba, a member of the President's National Infrastructure Advisory Council and member of the Global Advisory Council for the Wilson Center. That should be exciting. And then after that, we've got Ivan Feinseth, Senior Partner, Chief Investment Officer, and Director of Research at Tigris Financial Partners, coming up at 1:45 p.m. Eastern. Again, Money Mitch, stock market movers starting up here soon. Without further ado, go ahead, spin you guys over there. We'll be back tomorrow, all access, Benzinga Live. Till then, stay great and happy trading.